Okay, let's unpack this. Imagine you run a lemonade stand, a really, really big lemonade stand, and one year you sell significantly less lemonade. I'm talking a massive drop in sales. By all conventional logic, you should be panicking.
Oh, for sure. You'd be holding crisis meetings.
Exactly. But then you look at your bottom line, the actual money you get to keep, and it's gone up significantly. That is the exact contradiction we are looking at today with Turkey's industrial giant, Tüpraş.
It is. It's a fascinating riddle. How did they lose over 200 billion TL in revenue compared to the previous year, yet somehow manage to increase their net profit?
It sounds impossible.
It does. Welcome.
Welcome. Today's going to be a fun one. We are on a mission to decode the massive 2025 consolidated financial statements and annual report of Tüpraş, that's Türkiye Petrol Rafinerleri AHO, for anyone who's curious.
And look, if you're a retail investor listening to this, it's easy to just think, oh, it's just an oil company.
But it's so much more than that, isn't it?
It really is. This deep dive is crucial because it's not just about refining oil. It's a masterclass in how a company navigates, a high inflation environment, how they manage a literal mountain of cash.
A mountain is right.
And how they're trying to pivot this massive ship toward green energy while still keeping their investors happy with big dividends.
That's the key. So let's first get to know the company a little, because when I think of Tüpraş, I just picture those giant refinery towers and smoke. But we need to understand the beast before we analyze its diet.
That's a great way to put it. Tupras is really the engine room of Turkey's energy sector. It was established way back on November 16th, 1983.
And it's headquartered in Istanbul.
Yep, right in the heart of Istanbul in Şişli. But their physical presence, the refineries, that's nationwide. And just to give you a sense of scale, in 2025, they had an average of 6,269 employees. That's like a small army.
And it's not just the refineries. I was looking at their org chart, and it's like an octopus. It's so integrated.
That's a perfect analogy. The core is obviously refining crude oil into diesel, jet fuel, gasoline, all of that. But the group is involved in every single step.
Like shipping.
Exactly. They've got subsidiaries like Ditaş for shipping moving crude across the seas. They have Körfez Ulaştırma for rail transport. And then there's Entek, which is all about electricity production.
Oh, I saw they even have a trading arm in the UK, Tupras Trading.
Correct. And we can't forget Inspire, which is their vehicle for new energy investments. So they're vertically integrated. They control the supply chain from the tanker to the refinery to distribution.
Which gives them huge control.
Huge. They aren't just buying oil, they're managing its entire journey.
Now, for the investor listening who actually owns this, I know it's a coast company, but how much of it can we, the little guys, actually buy?
So the structure is interesting. It is, you're right, controlled by the Coast family. Energy Investments AS holds about 46.40%, and Coast Holding has another 6.35% directly. But here's the key for the retail investor. The public float, or halka açık kısım, is huge. It's 46.77%.
Wow, that is significant. Almost half the company is just floating on Borsa Istanbul. No wonder it's a staple in so many portfolios.
It's a real heavyweight. But there is one very, very special share you need to know about. The Class C share.
The golden share.
That's the one. It's a single share held by the Privatization Administration. It doesn't pay a dividend or anything, but it gives the state authority over any decisions that affect the Turkish Armed Forces fuel supply. It's basically a national security safeguard.
So even if you bought all the public shares, you can't just decide to shut down the jet fuel supply for the Air Force.
Exactly. It makes sense.
It does. Now, speaking of the top brass, I saw a number in the report for executive compensation that made my eyes water a little bit.
I thought you might catch that. Yeah, the senior management, so the board plus the top execs receive benefits totaling 1.12 billion TL in 2025.
1.12 billion. That's up from 1.02 billion the previous year, even in purchasing power terms. That's a lot of zeros.
It is a substantial sum. I mean, the company would argue it reflects the scale of the responsibility.
Yeah.
You're managing hundreds of billions in turnover in a really volatile environment. But for an investor, it's always a number to keep an eye on.
For sure. So before we dive into the numbers, what's the playing field like? What's the sector look like for them?
Well, they operate under the petroleum market law. This is crucial because it means they are largely price takers.
What does that mean exactly?
Their pricing is strictly tied to Mediterranean market prices and the US dollar exchange rate. They can't just arbitrarily decide to raise prices to boost their margins.
So they're at the mercy of the global market.
In many ways, yes. So if we were to do a quick SWOT analysis to kind of sum up their position in 2025.
Yeah, let's do it.
Strength. Massive cash generation. As we'll see, they have what you'd call a fortress balance sheet.
Okay. Weakness?
High sensitivity to foreign exchange rates and global commodity prices. As we saw this year, revenue can drop fast if global prices dip.
Right. And
Opportunity. The big one is that strategic shift to zero carbon electricity. We'll get into their moves in Romania.
and the threat.
Has to be the inflationary environment. Operating under TMS 29, the hyperinflation accounting standard. It just makes planning difficult and creates a kind of fog around the real numbers.
Okay, that sets the stage perfectly. We have a cash-rich giant facing revenue headwinds, but trying to pivot to the future. Now we can move on to our analysis. Let's crack open this 2025 annual report.
Let's do it. But first, a really critical disclaimer.
The inflation disclaimer.
Of course. All the numbers we are about to discuss are adjusted for inflation under TMS 29. They reflect purchasing power as of December 31st, 2025.
So if you compare these raw numbers to old historical data without adjusting, you'll get the wrong picture.
Completely wrong. We are comparing apples to apples in 2025 money.
Got it. Real purchasing power. So let's hit the headline number. Revenue, sales. In 2024, they did over $1 trillion TL. 1.06 trillion. What about 2025?
It dropped to 830.4 billion TL.
Wow. That is a massive contraction.
Yeah.
So over 200 billion Turkish lira that just vanished from the top line.
It's a huge decrease. It reflects lower global product prices, maybe some exchange rate effects when you adjust it all for inflation. And usually, when your top line shrinks that much,
You expect profit to just crater because of all your fixed costs.
exactly. Usually operating leverage kills you there. But let's look at gross profit.
Okay.
Gross profit came in at 81.2 billion TL, down from 89 billion in 2024. So a decline, yes, but notice something. It didn't drop nearly as steeply as the revenue.
So their gross profit margin held up pretty well.
Very well. It suggests they managed their cost of sales, so their crude oil inventory costs very efficiently. They navigated that spread between crude prices and product prices really well.
And operating profit.
Same story, really. It dropped from 46.7 billion TL down to 41.6 billion. So the core business, the actual refining and selling of oil, it made less money than the year before. There's no sugarcoating that.
Okay, so sales are down, gross profit is down, operating profit is down. And then we get to the bottom of the page. The net period profit, the number shareholders actually care about.
And here is the twist we mentioned right at the start. The net period profit for the parent share actually went up. It went to 29.5 billion TL compared to 23.9 billion the previous year.
How does that happen?
Yeah.
How do you make less money selling fuel, but end up with more money in your pocket at the end of the day?
It's a mix of financial muscle and tax strategy. When you're sitting on a huge pile of cash in a high-interest environment, your financial income can do a lot of heavy lifting.
Okay, so interest from their cash pile helped.
A lot. But also, they had significant tax income from deferred tax assets.
The deferred tax assets. That always sounds like accounting magic to me.
It's not quite magic, but it is a non-cash boost. Essentially, because of past investment incentives, they were able to book a tax benefit that increased their net profit on paper. It helps the bottom line today based on expectations of future profits.
And that would have boosted the earnings per share too.
It did. EPS rose to 15.32 kurus, up from 12.44 kurus. So for the retail investor holding the stock, their actual claim on earnings grew, which shows incredible resilience.
That is the aha moment. Resilience in the face of a revenue cliff. Now, I noticed in the segment analysis, there are really two businesses here. You have refining and you have electricity.
True, but let's be really clear about the scale difference. Refining is still the breadwinner, by a mile. It brought in 820 billion TL of that revenue. Electricity, just 10 billion.
So electricity is basically a side hustle right now.
A very strategic side hustle. It's tiny, but it represents the future growth area. Refining is the cash cow. Electricity is the cap they're trying to grow.
Speaking of cash cows,
Yeah.
let's get into the cash flow and balance sheet, because I feel like this is where Tupras really flexes its muscles.
Flexing is definitely the right word. If you want to understand the safety of this as an investment, you have to look at the cash position. Cash and cash equivalents reached 91.7 billion TL at the end of 2025.
91.7 billion. I mean, that's just a lot of liquidity.
And it's up from 79.2 billion the year before. Now compare that to their debt. Their total financial liabilities are 50.2 billion TL.
Wait, hang on. Let me just do the math in my head. They have 91 billion in the bank, and they owe banks 50 billion.
Correct. Which means they have a negative net debt. a net cash position of roughly 41.5 billion TL.
So they aren't just swimming in oil, they are literally swimming in cash. They could pay off every single one of their bank loans tomorrow and still have over 40 billion lira left over.
That's what we call a fortress balance sheet. It means they can weather storms that would sink other companies. When oil prices crash, debt-heavy companies go bankrupt. Cash-rich companies like Tupras survive and even buy up assets on the cheap.
That's a great point. It's a huge buffer. Let's look at equity.
Shareholders' equity is at 369.4 billion TL. Now, it did decrease slightly from 374 billion, but there's a very good reason for that, and it's a reason investors love.
Let me guess. They gave the money back to the shareholders.
You got it. The equity dropped primarily because of massive dividend distributions.
Before we hit the dividends, I saw a note about land revaluation. That sounds like a big change on the asset side.
It was a key audit matter. They revalued their land and plots to a fair value of 86.3 billion TL. I mean, they've owned this land for decades, so its book value is tiny.
Right.
Bringing it up to 2025 market prices adds a huge chunk of value to the balance sheet. It's a reminder that they don't just own refineries, they own massive amounts of prime industrial real estate.
Okay, let's talk about where some of that cash is going. Investments in new projects. You mentioned the green pivot.
Yes. In January 2025, through their subsidiary Inspire, they acquired 2 companies in Romania, Eco Sun and Euromec Geocanari.
Those sound like sci-fi robot names.
They do, don't they? They're solar power plant projects. This is concrete proof of their zero-carbon strategy. They aren't just talking about green energy, they're going out and buying the capacity. It's a clear signal they're using today's oil cash to fund tomorrow's solar electrons.
And speaking of today's oil cash, dividends. This is why my uncle loves this stock. 2025 was a pretty good year for payouts, wasn't it?
It was exceptional. The total gross dividends decided came to 29.3 billion TL.
29 billion lira returned to shareholders.
And it was paid in 2 installments, one in March and one in September. If you look at the totals, investors received roughly 15.2 TL per share in gross dividends. For a retail investor, that kind of cash flow is incredibly attractive, especially in an inflationary period.
You want cash now, not just the promise of capital gains later.
Exactly.
It really validates that cash king status. But no investment is without risk. We have to look at the dark clouds, too. The auditor, EY, flagged a few things in the footnotes and critical disclosure section.
They did. EY issued a positive opinion, which is good, but they highlighted these key audit matters. One was the deferred tax assets we talked about earlier.
Okay, explain the risk there like I'm 12.
All right. Tüpraş has about 11.9 billion TL in these deferred tax assets from investment incentives. Basically, the government says, since you invested in this big new machine, you get to pay less tax in the future.
Sounds good so far?
But you can only use that tax asset if you actually make a profit in the future to pay tax on.
Ah, so if they suddenly stop making money, that asset just vanishes.
Poof. Exactly. It relies entirely on predictions of future profit. That's why the auditors check it so carefully. If the business turns sour, that 11.9 billion on the balance sheet could get written down to 0.
Got it. What about risk management with all this oil and currency swinging around?
Well, their credit risk is actually quite low. And the reason is that 72% of their trade receivables come from just their top 5 customers.
So they're big, reliable customers.
Mostly state entities or major distributors. They aren't chasing thousands of little gas stations for payments.
That's secure. But what about the market risk? The price of oil changes every second.
They use hedging derivatives, and they use them aggressively. They hedge what's called the crack spread. That's the difference between the price of crude oil and the price of the final refined product.
Yeah.
And they hedge their foreign currency volatility. Doesn't eliminate risk, but it smooths out the really big bumps.
Okay, so we've looked at the company, the numbers, the cash, the risks. Let's try to pull this all together. What is the final synthesis here?
The narrative for Tüpraş in 2025 is really a story of resilience. I mean, they faced a revenue contraction of over 200 billion TL.
Yeah.
That is not a small bump. That's a giant hole.
But they didn't fall into it.
No. They managed their costs brilliantly. They used their massive cash pile to generate financial income, and they actually increased the net earnings for their shareholders. They are a cash king that is somehow funding both massive shareholder dividends and these big green energy acquisitions at the same time.
It's like they are milking the cow to feed the calf while also giving the farmer a nice big paycheck.
That's a very rural metaphor, but yes, that's exactly it. They're balancing the old world of oil refining and dividends with the new world of solar investments.
But here is a provocative thought to leave you with. We saw refining revenue drop. We saw electricity revenue is still tiny 10 billion versus 820 billion.
A drop in the bucket.
Right. So the company is sitting on a mountain of cash right now. But as they transition to electricity, can a refining giant really maintain these huge dividend payouts if oil revenues keep sliding? Or is that cash pile just a temporary buffer for a complete and maybe painful transformation?
That is the multi-billion lira question, isn't it? Are the dividends sustainable if the core business shrinks faster than the new business grows? Retail investors need to watch that net cash number like a hawk in the coming years.
Absolutely. The cash pile is the fuel gauge.
It really is.
Well, that wraps up our deep dive into Tupras's 2025 financial report. We really hope this helped you see past all the smoke in the pipes to the actual financial engine that's running underneath.
It's always in the footnotes.
Always in the footnotes. If you enjoyed this analysis and you want us to decode more giants of the stock market, please go ahead and smash that like button, subscribe, and share this with your investor friends.
And if you want to support the channel directly so we can keep buying these dense reports and, staying up late reading them,
please do evaluate our membership options. It really helps us keep these deep dives coming.
And remember, you can always show your support with super thanks right below the video.
Thanks for listening. See you in the next deep dive.